All right. Well, welcome and good evening, everybody. My name is John Mazzara. I'll be presenting tonight. With me is my co-presenter, Pete.Moy. I'm with RE/MAX Results. This is my 39th year selling homes. And Pete has been with Wells Fargo and with various mortgage lenders as a broker. And he brings a wealth of knowledge, not only of the existing products and programs, but some of the unique things that other lenders can't. And I just touched on it earlier that when you work with a lender, you want to work with somebody that can bring you all the options, not just some of the options. And that's maybe why you want to work with somebody that's a broker that has access. Otherwise, you may not hear about it. You may or may not hear about it from your real estate agent if they're not familiar with it. So I'm going to go ahead and share my screen. All right, can everybody see? All right. So we're going to go over the Twin Cities first-time homebuyer class. Don't make these 6 mistakes. So as a first-time buyer, it's your first time. And the average person only buys a home maybe 3 to 5 times in their lifetime. So it's not something you do every day. You might be concerned, stressed out, intimidated. You might have heard different things from different people and you're not sure where to start. So hopefully I'm going to give you lots of information tonight that's going to make you comfortable in deciding to pursue home ownership. About me, I started when I was 21 years old. I graduated from St. John's for my undergrad and St. Thomas for my MBA. So a lifelong Twin Cities resident, sold over 1,200 homes across the metro. And I work with buyers, sellers, and investors. And I do know the programs and I do know the various lenders that can deliver them. So if we were to work together, I would be able to help guide you appropriately to what's right for you. You can Google me, I can provide references, and you can learn more about me if you're interested. So if you're ready to buy a house, these are the steps that are involved. And you can either do them individually by yourself, or you can have a buyer's agent. I would encourage you to find somebody to guide you, and that would be to get a buyer's agent for representation so that you have somebody that can give you the best advice as you go through your purchase. One of the things that we first show you when we have a material conversation about real estate is the definition of the people that are involved. So there's somebody with the sign in the yard, that's the seller's agent. There's somebody that represents the buyer that would meet you at the property, write up your contract and give you advice, that's the buyer's agent. And sometimes it's the same company representing both parties, and that's called dual agency. So if you were to purchase, let's say from me, a listing that was by RE/MAX Results, I would have obligations as a dual agent. And then another way you can work with an agent is through facilitation. So maybe you have a friend or a family member that's selling their home and you've agreed to terms, but you don't know how to put it together necessarily. Then you would reach out, we would do facilitation. And that's the 4th way that you can work with an agent in a real estate transaction. You'll notice in the bottom of this page that there's a notice of predatory offenders. So if you want to know where a registered sex offender is, there's a website and a phone number that's given to you. It's a non-disclosure item by a seller. So when you buy a home and if you were to find out later that offender was living closer than you would have liked and you wished that they would have told you, they're under no obligation to do so because you're given this website and phone number as a resource. Before we can actually take you in a property, we've changed, or not we've, the industry has changed some of the rules. We have to either have a contract for representation with you in place, or we have to have a showing agreement that expires in 7 days. But either way, we have to have an agreement with you in order to show you a property. So I can explain that with you in depth individually should you want to have that conversation, but just know that it's a little bit different. The only way you don't have to sign something is if you go through an open house. One of the things we always do is give you data so that you can make a good decision about what's happening in the Twin Cities. Is the market appreciating, depreciating? And I can do this by city, county, or neighborhood, or I can do it macro or micro that way. So tonight we're looking at a macro view. This comes from the website NMLS Realtor, and that website compiles the data from sales data from the North Star MLS, and that is our regional multiple listing service where the realty companies list their properties. And what we're seeing here as of last month, this is the most current one, is that homes in February to February, year over year, appreciated by about 6%, if you look at the median sales price column. Now, if you want to smooth the data and you run your finger across, you see that the prices went from 370 to 382, roughly a little over 3% appreciation rate. Now, that's more of a normalization to the way that salaries are and that maybe regular inflation would be, is in that 2 to 3% range. So I wouldn't plan on double digits being a consistent and reliable measure of real estate in the Twin Cities. That's unsustainable in my opinion. But 2 to 3, I think, is something that, let's see here. Okay, and then we've got days on market. So the average home, let's see. I'm going to decline that. Then what we're looking at here, I'm getting something popping up on my screen. I just have to decline these here. Okay. Is that popping up on anybody else's screen or just mine? Okay. Well, this just shows, I'm just going to move this off to the right here. This just shows that the price range is continuing to appreciate, and that's something that probably will continue as long as the Twin Cities experiences growth. And right now, Minnesota is growing net positive, not net negative. And we have a robust environment where we have multiple employers and enough jobs, generally speaking. So what are the steps to home ownership? Well, to come to a class like this, and if you're going to be using down payment assistance, then what you're going to need to do is take a special class specific to the loan type that you might be using. You can use any lender you want to get pre-approved, but I'm going to encourage you to use somebody that has access to all the programs so that you hear about all of them. Underlying the majority of down payment assistance programs is either a conventional loan, a VA loan if you're a veteran, or FHA. So conventional and FHA are for everybody. VA is only for veterans. Down payment assistance programs dovetail into the underlying type of a loan. So they cover the down payment that you don't have and the closing costs that would be necessary. So that's why even if, let's say, an FHA loan requires a 3.5% down payment, you can purchase with as little as $1,000, and then that differential is what you borrow simultaneously in the form of a second mortgage. So you have two loans and two payments, one covering the base mortgage, one covering the down payment assistance program. Once you've figured out the financing and you get your pre-approval letter, then we go out shopping. We set up a search based on your minimum parameters, and then we go out and we find that home.
Hey, John,
yes?
Can I add something? So a lot of times the down payment assistance programs do not require a payment. No, so you would only have one payment if that's the case.
Thank you. Yep, some are deferred and some don't have payments or interest associated at all. So it's variable. Yep. Thank you, Pete.
Yeah, most of them don't have to make a payment when you're
after closing until you sell the house.
closing up until you sell the house.
Okay, thank you. So once you're approved and we've got your search set up, we look at what's available and then we start to go out and view homes. If it's the spring market, which is what we're in right now, you're going to find that there's going to be a lot of competition for the nicer homes, and we might be involved in multiple offers. Now, I've got some clever ways in which you can win in multiple offers, and I'll mention that. Well, maybe I'll mention one of those ideas right now. If you look at how people make offers, they typically end them in a 0 or a 5. So if you're going to offer 250 or 255, I'm going to encourage you to do 253 or 258. So go 2,000 or 3,000 over whatever your maximum would have been to beat out another buyer that's also offering in 0 and 5s. I think that'll give you a competitive advantage. But once we offer and negotiate, we will eventually get a home under contract. At that time, you can decide what type of home inspection or inspections that you want, and I'll give you some guidance on that when we get to that section. And if you buy a condominium or a townhouse, you have legally 10 days to review the rules, regulations, and bylaws. And once you've reviewed them, if you want to go forward, you can. But if there's any reason that you don't, you can cancel the contract and get all of your money back. So it's kind of like a 10-day free look. Not that we want you to use it for that. We want you to be, understanding of what you're buying before you buy it. But should you decide that you can't live under the rules and regulations for whatever reason, even if they're perfect, you just had a change of heart, you can cancel and receive your money back. Appraisal and title work, that happens after your home inspection is complete and you've given your lender the nod that you're going forward. They reorder final documents, so they make sure that you're still employed. They re-update your credit report and get updated pay stubs and bank statements. Then they sign off, you get final loan approval, your loan is cleared to close. We go to a closing, you sign for about 45 minutes, and then at the end, you own the house, and the seller gets the proceeds. This is what it looks like graphically. So obviously, we're in a home buying class, we have a picture of a house. So you guys are at the top here, getting educated tonight, finding out what it takes to buy a house. You're figuring out what you can afford in your budget. You're going to get a home loan with a lender of your choice. And then that allows us to go out shopping and make offers on properties. We'll negotiate to the best of our ability. We'll eventually get a home under contract, do our inspections, work through that, finalize the mortgage application, again, go to the closing and decide what party or holiday you'd like to host at your home. And if you invite me and Pete, we'll bring the beer or chicken wings. So you just let us know what your preference is. So mistake number one that first-time buyers make is ignoring the incentives and the programs that are out there. All of the programs, the down payment assistance programs, work well with Fannie Mae conventional loans and Freddie Mac conventional loans, as well as FHA. If you're a veteran buyer, there is no down payment required because a veteran loan allows you to go ahead and finance properties at 100%. Now, you may need some assistance for closing costs, which you may use that loan for. In general, though, a first-time buyer is somebody that hasn't owned a home within the past 3 years. So you may know family or friends that used to own a home that don't own a home that would like to take advantage of some of the first-time buyer programs. They may not be aware that they're still considered a first-time buyer if they haven't owned a home in the last 3 years. So that's something that a lot of people don't know. So if you're owning a home and then you've sold it and been out of the market for a while, you can come back in again and take advantage of these programs. Most programs have a education component, meaning a class that you have to take before you can be granted the money. Some programs require it to be done before you can be approved, some of them before you close. The classes can be online or they can be in person. They vary from down payment assistance program to down payment assistance program. But what they want you to do is to be successful. No bank wants to foreclose on your house. And so these home ownership classes are very valuable because they teach you about budgeting and understanding what it takes to be a homeowner so that you're successful. Again, the types of first-time buyer programs today, they can be specific to a city or a county, or they might be statewide. Most are dependent on your income, meaning you can't own or earn too much, but many of them have very large income amounts, so it's not just for low-income individuals. Pete, can you tell us what maybe MHFA might be at the moment for somebody? I know that's pretty high these days.
Okay, yeah, so it depends on, they've got, two deferred down payment assistance, which means you don't have to make any payments until you move out of the house or sell the house, and that's depending on how many people live in the house. I'm just gonna say just the two-person households, it's about $80,000. If you get the down payment assistance where it's paid back over 10 years, the income limit's about 135,000 for a household of two. So they're pretty liberal. So
Yeah.
So then there's even another one they have that's like 160,000 that you can make and still get the money.
Awesome. So that's that's a very large amount. A lot of people think you have to have very low income to qualify. You can see that you don't. And then depending again on your income depends on the program. Everything though is credit score dependent. So when a lender grants you a loan, they want to make sure that they're going to get paid back. So they want to make sure that you have the ability, i.e. the income, and that you have the willingness, and that's oftentimes reflected on how you pay your bills, i.e. through your credit score. The down payment assistance programs Pete just referenced, some are forgivable, some are paid back over time, some are loans, some are grants. Here's a hypothetical example. We have an individual named Anita wanting to buy a house for $250,000 using down payment assistance. So in this example, we have her using a conventional loan with a minimum amount down of 3% and closing costs of approximately 2.5%. Adding them together, I get $13,750. Now, she would need to put $1,000 of her own money and could borrow the difference. So the $12,750 required on top of the base mortgage of $242,500. So her all in is $1,000 out of pocket in this example. So again, don't let money hold you back. And because if she waits a year and that home appreciates another 3%, for example, it'll cost her $7,500 more in terms of the purchase price. So that's why, when is the best time to buy? Typically, it's yesterday, meaning that the homes continue to appreciate over time. Now, one of the things in the multiple listing service is a button. So this is a listing I have right now over in Woodbury. And you can see this where I have these arrows and that little dollar sign there with the check mark. If we were to click on that, it would take us to a down payment assistance tool, and it would show us various programs that house would qualify for. And then we would see if you qualified for some of the programs that show up under that button. Some cities, like Edina, have a really nice program. However, Edina at present is out of funds. Now, they will have funds again in the future. This program has been around since the 80s, but at present, they haven't had enough of that money returned through repaying the loans. But you could get 25% of the purchase price, up to $90,000, and you could make up to $150,000 under the Edina program. Now, Pete and I just did a transaction with a new home buyer utilizing this program, and Pete was able to get them over $62,000 of deferred money. So it helps you get into maybe some communities that might be expensive that you might say, well, I don't know if I could afford, let's say, Edina or Woodbury. Both cities have programs, amongst many others, Minnetonka, for example. So they're not just confined to the cities proper, meaning Minneapolis, St. Paul. They're in many of the suburbs as well. So this is what Pete was referencing, some of the down payment closing cost loans from the Minnesota Housing Finance Agency. And the different amounts depend on your income and which one you want to use. So you can get up to $18,000 from the Minnesota Housing Finance Agency, and this money is perpetual, so we don't have to worry about this money running out. And Pete can go over all the intricacies of these programs. So Pete works at Nations Lending. Look at that good-looking guy right there. There he is. There's Pete. So again, you're all going to get a copy of this, and so of this recording, and so you'll have Pete's information here. But if you want to take a screenshot, take out your camera and take a picture, that's Pete, and he is more than happy to review your situation at any time. Now, one of the programs that we recently worked on was something called the First Generation Program. So this was open to individuals whose parents had not owned a home. So they were the first generation, you, meaning as a buyer. Or if your parents had lost your home in foreclosure, you would potentially be open under this program. Of the two versions, they currently are out of money in the program that's $100 million. But they do.
No, the other way around.
Other way around, I'm sorry. The $50 million program is out of money, but the $100 million program still has funding. And it is running out though. So if you're a first generation home buyer, I would encourage you to talk to Pete sooner than later and get in line on this. It's almost a 2-month processing wait. before you're going to be eligible to go out and make a purchase. So they are backlogged and they are running out of money. And now that our state has a deficit again, it's unlikely that this is going to be reestablished with new funds, at least under this current iteration. Under this program, you can get over a 5-year period, you can get that $32,000 up to that amount forgiven. Pete and I did, I think, 4 or 5 of these the past 6 months. So it's a great program for somebody that is a first generation home buyer. Okay, more about Nations Lending. So Pete is allowed to do loans all throughout the United States. So if you're relocating, let's say for your job, and you want to get pre-approved here with somebody locally and take your approval to another state, you can certainly do that. So Pete lends it all across the country, Minnesota and otherwise.
I'm going to add this though. If you are moving out of state and are going to use a down payment assistance program, I'm probably going to refer you to someone in our company that works in that state because they're probably more familiar with the down payment assistance programs in that state. As you know, I don't know what's available like in Illinois or New York, or
Sure.
because I don't do very many loans out of state personally.
Perfect. Yep. So Pete will hook you up with somebody in his company if he's unable to do it, but they're a nationwide lender, and as you can see, they do billions of dollars worth of loans. So a very credible lender. These are just some of the products that they offer. They offer some Alt-A and special products that aren't on this list. One
Yeah,
of the unique
we're brokers, so that we've got many different places to send a loan if it doesn't fit the normal box.
Yep, and he does renovation loans. So he does loans specific for rehab. If you're looking to buy something that's a little scratch and dent, he has access to that as well. So the types of mortgages, the most common are the first 2, conventional, everybody is eligible, and FHA, where everybody is eligible. There will be underwriting guidelines that vary from lender to lender, and there are sometimes overlays. An overlay is where the lender puts their restrictions over and above what the baseline program has. A conventional loan is not secured by the government, but is offered by quasi-government enterprises called Fannie Mae and Freddie Mac. And they all underwrite slightly different, meaning Fannie writes slightly different than Freddie, and Freddie slightly different than Fannie, but they're almost identical. And depending on your situation, Pete may broker the loan to a Fannie product or a Freddie product. And again, that's the advantage of a broker. A broker can do that. If a bank only sells to Fannie and Fannie won't meet or match what you're looking to, but Freddie would, and they don't sell to Freddie, then they're going to tell you that they can't do the loan. Whereas if you work with a broker that has access to both investors, you're going to have access to both programs, and that's important. FHA is a federal housing administration loan, and they're insured by the government. So if you don't put 20% down on a conventional loan, you'll have mortgage insurance. On FHA loans, you'll also have mortgage insurance. And the purpose of mortgage insurance is to protect the lender lending the money or the investor against your default and taking a loss. So the reason that you can buy a house with a low down payment is because there's insurance standing behind that loan should a default occur. So the benefits of FHA is we can utilize and work with a lower credit score. You can go down to as low as 580. Now it is possible to do that, but not all lenders will do a 580 score. Some have, for example, a 640 minimum or a 620. So if you do have a lower credit score, Pete can work with you to improve your credit score, give you some suggestions, and he can do a soft pull and maybe make recommendations on where you can pay off certain creditors to improve your score. So Pete does a great job of getting you ready to get ready and doing the counseling. With regards to credit scores with a larger down payment, you may be able to get as low as 500. Now that generally isn't the case. Most people won't do it that low, And again, most of the time you have to be in the sixes.
Okay, yeah, we don't have any overlays here, so as long as when we run your loan through the FHA automated underwriting system, uh, with an approval, we will go down to 500, uh, as long as it makes sense.
Okay, nice. Another interesting thing is the seller can pay closing costs on an FHA loan up to 6%. Now, in this market, a spring market, it's unlikely that they're going to, but they could. So we may be able to get some concessions from the sellers. It depends on the property price, and those types of things. Lower mortgage rates oftentimes are on FHA loans than maybe some of the other products, and they accept higher debt to income ratios. And you can do a 30-year, 15-year fixed or something in between. And down payment assistance programs work well with FHA. They dovetail into most of the programs. Another kind of a comparison chart. You can see FHA requires a slightly higher down payment than the minimum on conventional, but they allow for a lower credit score. They allow for both of them up to about 50% of your income to be used for your debt ratio, inclusive of a mortgage payment. So they don't want you to get generally beyond that because they don't want you to get in trouble. The loan limits are 529 for FHA and 806 for conventional. So depending on your purchase price, you may be in a higher conventional loan than a FHA loan. First-time buyers oftentimes lack money to buy a house. And if that's the case, where can we come up with the down payment? Well, we've covered down payment assistance loans to some degree. You can also get a gift from a parent or a relative. If you have a 401k, you can take a loan from that with most employers, either the lesser of 50% or $50,000. If you have an IRA, you can take a distribution up to $10,000 without a penalty, but you do have to claim it as income, or the seller could pay for some of the closing costs. So what we're trying to show here is, again, there are multiple areas that we can look to find the funds that you might not have automatically thought about. Lots of ideas for you on where to get the money.
I'm going to add one more.
Sure.
There's some employers that will, maybe give $5,000 or $10,000 as a benefit for first-time home buyers.
Fantastic. That's what I want to work for. All right. What you can use for down payment, or what you can't, I'm sorry, use for a down payment is borrowed money. So you can't go cash advance a credit card. You can't go take a loan at the bank, a regular loan. You can take a first-time buyer down payment assistance loan, but you can't just go to the bank and say, I would like to borrow, $20,000 for a down payment. You can't borrow money from anybody and have a payment associated with it. It could be a gift, but you can't borrow money on a formal loan basis other than a lender or with a down payment assistance. And you can't use mattress cash. So if you've got $50,000 in a briefcase in your closet, you've got to reintroduce that into the banking system at least 2 months prior to making your loan application. So you're not going to be able to just show up with cash. That's not going to be allowed. What they're concerned about is money laundering, and so that's not allowed. So you have to reintroduce any cash that you have. Maybe you work for tips or something like that. You have to get that back into the system.
I'm going to add something to that. You can do a secured loan and use it for down payment on a house. So, example, let's say you have a car that's already paid off. You
Mhm.
can do a new car loan and use that money as long as you use a car for collateral for your down payment. The only thing is this, we will have to count that payment against your qualifying ratios.
Perfect. Thank you, Pete. A buyer's eligibility, again, we talked about was based on your ability to repay so that you have the income to pay it, your willingness, which is demonstrated by your credit score, and then the property that you're buying has to be a decent home. It can't be falling apart because if the bank had to foreclose, they have to be able to turn right around and resell it. And so the collateral that you're buying, unless you're using a renovation loan, the collateral has to be decent, meaning the house has to be in good condition. Okay, so I'm going to skip the Q&A until the end. Again, if you do have questions, type them in the chat to Pete, and Pete will answer those as we go. Mistake number 2 is not getting pre-approved before you view homes. So remember, to get the approval, you have to have good credit, income, and a down payment, or the ability to cover each of these through different angles.
So there is a question, so I'll just
Okay.
Answer it, or at least it's from Jack, and it's he's asking, it's 2.5% of the purchase price realistic for closing costs. Well, the way I answer that would be a lot of the costs of getting a loan are fixed. It doesn't matter what the price of the home is. For example, the appraisal, the title closing fees. So usually the more expensive the house, the lower that percentage tends to be. So 2.5% is realistic, for like a $300,000 house. But if you buy like a $500,000, $600,000 house, it might be high. So you want to chime in anymore, John, or?
Yeah, I would say, so what happens, Jack, is that the bigger the loan, the smaller percentage of that purchase or that loan is in closing costs. So on a smaller loan, like let's say you took out a $100,000 loan, the closing costs might be 5%, say $5,000. If you took out a $500,000 loan, they might be $9,000. So the as the loan gets bigger, the percentage of that loan gets smaller. But I would plan on, if you're a first-time buyer buying in that range of 200 to 400 maybe, that you're looking probably in that 2.5% range. Okay, so loan pre-qualification, you fill out an application and they're going to pull your credit, they're going to verify your income, and they're going to verify your assets. All of that takes a little bit of time, and so as quick as you can provide the information to the lender is as quick as they can continue with the process. So you can get approved online, in 10 minutes by putting information in, but that pre-approval that you get isn't really solid because nothing's been validated. We hope that what you put in is accurate, but it hasn't been reviewed. So the best way to do it is to work with somebody or a company that you like, generally that's local, that you can meet with, and that will help you through this process and get you through it. And normally it takes a couple weeks to get fully underwritten and approved. And you're going to be a much stronger buyer once you're done because you'll know exactly what you can qualify for. You can close quicker if you want to because you've completed half of this process already. And it gets you in a better position when making offers because we can say, this buyer, my buyer, is now pre-approved, but they've been underwritten. So all we need now is the appraisal and the title work. We don't have to worry about them. They're good, they're solid. And so as a seller, if I'm evaluating one or more offers at the same time, I want to know that I'm working with the strongest buyer. And being fully underwritten will get you to that stage. Tips for loan approval. Call with questions. We're all about education. That's why we're doing this tonight. We want you to be 100% confident. So we do this every day. And I understand that this is your first time, so you never have. So you're probably going to have lots of questions. Ask and ask and ask, and we're happy to answer them. You want to continue to live and act at the time of the mortgage application the same way you are at the time of the closing. So let's say it takes 30 to 90 days to start the process to close and find a house. We want you to remain relatively the same, meaning continue to live where you're at, continue to work where you work, continue to use your credit like you've been using it. Don't make extreme changes because that can wreck everything. So right after closing, you can change whatever you want. But by the time you start to the time you close, try to remain neutral, if you will, meaning remain the same. Underwritten approvals and pre-qualifications. Again, you can go online with some of the online lenders and put your information in, and they'll spit out a letter, but that letter has not been vetted. And I would highly discourage you from utilizing that type of a letter because if something comes up during underwriting and that letter that they created for you is inaccurate, then you'll lose the home and maybe your down payment. So it's always better to take an extra week or two, do it the right way, and then you have full confidence in the process. So pre-approval advantages, you know what you can do. I actually won't take anybody out to view homes until you've been through the lender process, because I don't want to spend my time or yours on looking at properties of which you're not qualified to purchase. So the first step beyond this class is to answer any questions that you have, and then to seek out a lender of your choice to get that approval in place. From there, we actually go out house hunting and we do the fun part where we go out and, shop. But we have to do the financing up front because we can't make an offer without an approval letter. So you got to do the chicken and the egg, the cart before the horse. You got to do it sequentially in order. Mistake number 3 is using the wrong lender. I've touched on this a couple of times. I'm going to touch on it a couple more. So not all banks are approved to use down payment assistance, nor are credit unions. So you may have your favorite credit union or the bank that you banked at your whole life, and they might be a great institution. But if you want to use down payment assistance, they may or may not have access to it. If you've never heard of it, but you're hearing about it here for the first time, it's probably because they don't offer it. Now that's fine if you want to use a larger down payment and pay your own closing costs, then use the bank that you've always used. But if you want to use down payment assistance programs, you have to be with a company that can offer them. And that's why Pete, for example, can offer everything as a broker and the down payment assistance programs. Having owned a mortgage brokerage for 25 years myself, I can tell you that you can get more product in the mix with a broker than you can at a bank. So I would encourage you at least to talk to a broker, and a broker that can use the programs, because not all brokers can use the down payment assistance programs either. So you have to use the right people. If you work with me as your realtor, I'll be your quarterback, and I can help direct you to the right people.
John, I'm going to add something.
Sure.
I can tell you this, even if you go to a larger bank and do just a vanilla loan, with your own down payment and your own closing costs, a lot of times, if you bring me an estimate, I can usually beat their rate or their closing costs for the same interest rate. So I just don't know. I do more than just down payment assistance loans.
Thank you, Pete. Yep.
Yep.
That's the added value of Pete. He does all the vanilla, all the everything everybody else does, and then some. So yeah, he's not just the down payment guy. He's the down payment guy, but he's also the guy that does everything else. So absolutely. And very competitive. Nations Lending is a huge lender. And he has the ability potentially to beat. So if you are approved and you buy with somebody else, a different lender, you can always come back to Pete. You now have his information and get a second opinion and ask him to quote it for you. So consider us a resource. We are a la carte. We like to work together, but if you have another realtor that you want or need to work with, and you want to work with Pete, that's all right by us. And vice versa. If you have a lender that you have to work with or prefer to work with, I can certainly help you as your realtor. So we like to work together. We work well together and have for many, many years, but we are a la carte. So we know that we won't work with everybody together. And again, feel free to use us individually as you need. Another question about selecting your loan is a 30-year fixed rate mortgage always the best? And the answer is maybe not. You might prefer an ARM, an adjustable rate mortgage, if you're going to have a shorter timeline in your home. So if you're going to be there 5 years, 7 years, 10 years, it would be worthwhile to take a look and compare the rates, because you might find, and again, it's daily dependent, but you might find that an ARM is cheaper than a 30-year fixed. And an ARM is still a 30-year loan. It's just fixed for a shorter period of time before it adjusts. So 5 years, 7 years, 10 years are the most common types of ARMs. And then there's the rehab product. So maybe you found the perfect house in the perfect neighborhood, but it has an atrocious kitchen or bathroom or both, or it needs updated mechanicals. So you can get a really good deal on it, but you don't have enough money to do all the repairs, and you're like, I'm not living it in this current condition and waiting 5 years till I can save up the money. Well, what you could do if you qualify for a larger amount is you could utilize a rehab loan. One of the most common is the FHA 203K. There's also Fannie Homestyle and some other ones that are out there that Pete could bring to you. He does both FHA and conventional rehab loans, and he could tell you the differences. And you could utilize those to borrow the money at the time of your purchase to do the rehabilitation that you want. The money goes to an escrow account, and then the work has to be completed generally within 60 days. But Pete would be happy to review that product with you as well. There are sometimes affinity programs with lenders. So some large lender or some large employers have affinity programs with other large lenders. And sometimes, depending on where you work, you might be able to get a gift card at that particular lender because of your employer. So it's always worth asking, hey, I work over here at XYZ. Is there anything special that you give our employees? And sometimes there is, sometimes there isn't. And then some lenders have their own portfolio of product. So not all people fit the program guidelines, but yet they might be a great risk and a great borrower. And that's where portfolio loans come in. So Pete has access to those as well, where private investors will make up their own rules through what's called the non-QM mortgage or an Alt-A product. And he can bring those to you. So your lender or loan officer needs to be a counselor, and they need to help you. You don't want a rate quoting monkey. And that's why you want somebody that's had enough experience doing loans to be like a doctor and diagnose for you what loan product is right for you and be able then to bring that to the table. Mistake number 4 is buying directly from a builder without realtor representation. So as a realtor, we represent all the different builders, meaning we can take you over to Lennar, M&I, Pulte, David Weekley, just to name a few. They're all listing their properties in the MLS. So if we set up a search for you in the MLS, you're going to see the new construction. The only requirement that we have is that we have to take you over there and register you on the initial meeting. So what they don't want is for you to drive around on a weekend, go in there and sign up, and then find a realtor and say, oh yeah, can you represent me? They want it to be the other way. They want the realtor to walk in with you and say, hey, my buyer, through their search found these homes or would like to view your home. Let me introduce you. And then we sign a form. It just says that John, you agree that John can represent you. There's no additional cost for that. So it doesn't cost you any more to have representation. But if you buy directly from the builder and you walk into that model home and you end up writing up a contract, the person that's sitting in that model home is representing the builder, meaning they're not representing you. So if it's not going to cost you any more to buy new construction with an agent and to have the guidance of an agent to maybe make suggestions on the lot, improvements, or compare builder to builder, why wouldn't you? It's not going to cost you anything additional. So I'm going to encourage you, if you want to buy new construction, we can set up that search and to let an agent work with you to do that. Mistake number 5 is to skip a home inspection when it might make sense and when it might not. So I start off this slide by saying, I will never tell you or recommend that you skip an inspection. I'll make suggestions as to how it will be viewed from the seller's perspective and then let you choose. So for example, in a multiple offer, let's say there were 5 people making offers on the same home. If you make your offer without an inspection contingency, then you don't have that contingency. And that's the key word, is an inspection is a contingency. And if you have a contingency, it means that you have the ability to walk away unscathed, meaning you get your money back and can cancel the contract. If the other offer that you're competing with doesn't have that, then if the seller accepts that offer without the inspection, they know they've sold their home. So as a seller, they're going to prefer offers that don't have inspections. As a buyer, you may never want to waive an inspection regardless. And if you're a first-time buyer buying an older home, that might be the right thing to do. Now, myself, who has been in, I don't know how many thousands of homes, um, I would feel comfortable buying a home myself, for myself, without an inspection. But for you, a first-time buyer who's never bought a home, I would discourage it, and instead I would encourage that you do have an inspection. And there are 5 different types that you can have. Normally, most buyers are doing 1 or 2. The types are a whole home inspection, takes 3 hours, costs you about $650. From that, you can do an add-on for a radon inspection, another $150. If you want to check the sewer line, that's about $300. If you want to check the chimney, that's about $300. And if you want to check for mold, that's about another $200. So most people don't spend all that money on all those inspections. But let's say you're buying an older home in Minneapolis or St. Paul, checking the sewer line might be very important. So that might be one of the inspections that you add on to the basic inspection, because the cost to replace the sewer line from the street into the home is between $15,000 and $20,000. And if you find that to be faulty, then the seller normally would fix that, because if they don't sell it to you, they're going to have to disclose the fault to the next buyer, and nobody's going to buy the home with a collapsing sewer line. Okay, so the risks of skipping a home inspection is that you're unaware of a problem. And if you've chosen to waive it, then you aren't going to be able to go back and go after the seller. So
There is a question here.
okay, Pete?
Okay, so it's from Tyler. Says he says it seems kind of uh the home inspection should include things like mold. That's what he thinks.
Yeah, so what they do is they come in and they take samples, they have to send it off, and they do it in a goes to a lab, and then they get the results back. Mold is generally not tested for because every home has mold in it. One of the disclosures that we give you, the seller's disclosure, has a 2-page reference, if you will, about water and mold, and that it's really a part of all homes. Now, whether or not it's active is the big difference, meaning many homes have had water at one time, which as it dried up may have created some residual dried mold. And that's really what they're referring to. Active mold, black mold, wet mold, that's not what they're referring to. But some people have really bad allergies and won't live with a house that had mold. And if that's the case, then we can certainly run that test. But it's another lab, another thing, and that's about another $300 for that to happen. So to keep the costs affordable, the basic home inspection is about $600 to $650. If we threw another few hundred dollars on top of that, a lot of buyers wouldn't be able to afford that, because this is a cost that's out of pocket. It's not something that you can finance into the transaction. So if you're spending too much money, and if you don't have a lot of money, then you might waive the inspection, which would be negative, bad for you. So that's why they do it a la carte. Is there another question, Pete?
Yeah, it looks like there's that's so he's saying 1,000 or 2,000 to get everything inspected.
That'd be correct.
Yep.
Yep. Now, if it's new construction, I think another question might have popped up too.
Nope. He just said thank you.
Okay. So if you're buying new construction, remember that home came out of the ground. So they had to dig a hole, they had to put a foundation, and then they had to have framing and bring in the utilities and so on and so forth. So what's happening is, as it's being built, the city where it's being built is sending out city or statewide inspectors to sign off. So if you're buying a new home built in 2024 or 2025, it had to have everything checked along the way up to current code and be signed off on. So the value of spending a lot of money and having a home inspection on new construction might be limited. So again, I'm not going to say don't do it, but I'm going to say most buyers that are buying a brand new house don't feel the need to do a home inspection, because it's been checked all throughout the building process in order to get a certificate of occupancy at the end, which it won't get unless everything is cleared by the city. So that might be one time that it might be okay not to have it. Again, I won't tell you that, but I won't tell you not to have an inspection. I'll let you make that choice, but that might be a time that you maybe reconsider having it. The other thing when you buy new construction is the appliances are warranted for 1 year, the mechanicals for 2 years, and the foundation for 10 years. And that's transferable from buyer to buyer. So if you bought a home that was a year old from somebody, you would still have a residual amount of warranty on the mechanicals of 1 year, and you'd still have 9 years left on the foundation. So that warranty is transferable, and the builder does have to provide that to you by law. And many of them take care of it with an insurance policy, although they can do it with a promise of coming back to resolve it as well. So the larger builders do it with insurance policies. Some smaller builders will do it with a promise. Mistake number 6 is skipping the condo document review process. So again, when you buy a condo or townhouse, you have 10 days to review the rules, regulations, and bylaws. You always want to review them so that you know what you're getting into. For example, what if you want to use it as a rental? If they say no rentals, well, then that would be a project that you can't buy into. If they had a dog restriction, let's say no dogs over 60 pounds, and you had a 100-pound dog, well, can't live there. So those are things you want to make sure that you understand the rules before you buy. What I will normally do is if we do have those restrictions, like large dogs or the ability or the want to rent, I'll make the call to the association prior to us viewing. And then if we find out the answer isn't the answer we want, then we won't go ahead and look at that property. But if it is, then we'll go look, and if we get it under contract, then you'll have 10 days to double check it. So maybe when I called the association, I was given incorrect information that I relayed to you. That's when you double check. So it's trust and verify. You're going to read all the documents and make sure that you're comfortable with what you're reading and can live under. You can get the rules from the Attorney General's website. So if you go to this site right here, www.ag.state.mn.us, and you click on the publications link, you'll be able to download the 4-page document explaining your rights when buying a condo or a townhouse. Now you could shorten that or down to 3 days, but most people don't. But if you're a fast reader and think you can resolve whether or not you should go forward or not, you may agree to that so that the seller whose home you're buying can then go out and buy another home, because until that 10 days are up, because you have that 10-day contingency, they can't do anything. And in a fast market, once their home is sold, they're going to want to be able to go ahead and buy themselves. This is what the document looks like. This is the first page of the 10 pages. Applies to all condos and townhouses. When we set up the MLS search for you, what we do is we add you as a contact. Then we set it up based on what you're looking for based on the minimums. So we set up coming soon and active listings in the communities that you want, or we can do a radius from your work or home where you are now, or I can draw a map. So maybe you have to live within a certain neighborhood due to a divorce and custodial restrictions, or due to a work restriction. We can draw a map and identify homes just within a certain area as well. So I do it by city, county, school district, by a map, however you want the search. Once your search is set up, then listings are sent to you. And if we don't find anything in the first batch, then we continue and send you new listings daily from the MLS until we find the right home. Pete, did a question just pop up?
Okay, yeah, but the question is, do condos and townhomes have unique inspections due to shared foundations, sewage, and etc.?
Yeah, that's a great question. No, they don't have any unique inspection, but some of the inspection items are limited. They typically each have their own sewer line, so it isn't one common sewer. The walls are connected in a condo or townhouse, typically, and an inspector on all inspections will look at what's visible, meaning they don't do anything intrusive. They don't open up walls. They will go in the attic if the seal into the attic is cut. So they won't break the seal. They'll open it if it's been cut. So the seller may have to take a razor blade and cut that seal in the ceiling open, or closet, wherever it is, before they'll go up there. They do many times open up their electrical boxes and take a look at if they're double tapping circuits, or if it's aluminum or those types of things. So they will do somewhat of an opening of a box, generally on an electrical box, but they're not doing anything invasive. So all inspections are typically what they can see and then commenting on it. Sometimes they'll get up on the roof, sometimes they won't. Depends on the roof, depends on the house. Now, one thing I didn't mention, but I'll mention it now, is that some cities require an inspection to be done prior to a home being placed on the market. So cities like Bloomington, Richfield, St. Louis Park, um, West St. Paul, South St. Paul, those are just some of the cities, St. Paul, Minneapolis, that you have to have as a seller, you have to have a home inspection. Now, the required seller inspection is different than the buyer inspection. It's much less of an inspection, but nonetheless, it is an inspection that gives you some information about the house. So you will be able to review that if you buy in one of those cities. Now, in those cities, condos typically are exempt, but houses and townhouses oftentimes aren't. So it depends on the type of property and whether or not it's exempt from that specific city inspection. This is another picture here on the screen of where we find the down payments that are associated with a specific listing. And this is where I showed you earlier that little dollar sign with the check mark. This is what it looks like when it opens up. I have this book available for you as a flip book. So if you were to take a picture of this, or again, you're going to get a copy of the recording, you could go to this website and view and read this book as a flip book. Now, if you're coming to my class in person, then I will be giving you a hard copy. Or if you would like me to mail you out a hard copy, I could do that as well. But that's what this book is. It gives you all the secrets of buying a house. And these are the things that we cover in those chapters. I also have a PDF that talks about why it might make more sense to own than to rent. Gives you kind of a comparison. And I have other books. I have books on buying real estate as an investment. I have books on selling your home. And I, of course, have the first time buyer book. So buying, selling, investing, I got you covered. I also have a YouTube channel where I interview people that are involved in the lending process and other aspects of housing. So if you're looking to gain more information, you can go out to my YouTube channel and watch my interviews. I think I have 300 of them or something. I have a lot. So how do you feel now? Hopefully excited, confident, ready to go, at least more informed than when we started the class, and you're ready to get going. So how do we get going? Well, you can book an appointment with me. So if you go to minneapolis-stpaulhomes.net/book, that'll take you to my Calendly link. If you want to do some bopping around and do some searching, you can go out to my website and set up a search for yourself. However, I prefer to set up the search with you on the MLS so that we can be more granular and customized. So homeownership is absolutely possible for you if you meet some minimum criteria, and if you need a co-borrower or a co-signer, we can do that too. So there's other ways to make it happen that I didn't really address, but Pete and I can on a later date with you. This is what it looks like when you go to the Calendly link. You pick a date, you pick a time, select it, and then if it doesn't work, I'll get back to you and ask that we reschedule. Otherwise, we'll go ahead and we'll have our meeting at that time. I don't discriminate, never have, never will. We want everybody to buy a house. And we have products and programs we think that can help lots of people do that. I have a little gift for you tonight. So if you'll take a 7-question survey, I will send you a travel certificate that looks like this. Now, the travel certificate does have a cost associated with it when you activate it. You can see in the corner, it says $33.24 a night. It's a variable, but right around that number. So don't activate this unless you intend to use it, and you have to use it within 18 months. There is no timeshare presentation, but it gets you a discounted rate at a hotel, either probably the Westgate or the Rio in Las Vegas. So if you like Las Vegas or have never been and want to check it out, this is a good way to get there. Here are the terms and conditions. So again, there is a cost associated with it, but it's a complimentary travel certificate that I provide if you take that survey. And this is me, that's my card. Take a picture of that, reach out to me, call me, text me, email me, wherever I can help. All right, so we're going to open it up for questions. If anybody would like to reach out to me and Pete, we'll stay here as long as everybody would like and answer any and every question that you have.
Okay, I'm going to add just a couple of things here.
Okay.
So I know there are many of you are students at the University of Minnesota right now, and you may be graduating soon. There are ways you can buy a house using a job offer, you know, in your chosen field before you start your job. So, if that's your case, reach out to me and I can let you know those details.
Are there any questions from anybody? Feel free to type them in the chat. It says 8 new messages here. Let's see, make sure we answered everybody. Yep. So if you have any more questions, again, we'll stay here as long as you want tonight, and then I'll be sending out this recording, which you can share with your friends and family. We're available to help whenever you're ready, we're ready. And again, we are going to be doing a similar presentation with actually new information. If you want to come down and visit us over at the Gates Hotel, we'll be there this coming Saturday. We're going to have 2 sessions, one in the morning and one in the afternoon. If you'd like more information about that, let me know. Thanks, you, Nitsi. Thank you, Michael.
Thank you, Craig.
Okay.
Thank you, Zoe.
All right. Well, we're glad we could provide this information. We want everybody to be a homeowner. All right. I'm going to go ahead and stop the recording.